Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. This is a brand new segment. With us is Rohit Srivastava. He's the Chief Investment Officer and Portfolio Manager for Saroj Bhanu Fund, and has put together a portfolio index for us with cannabis stocks with an artificial intelligence-based algorithm that has some predictive analytics. I'm going to let him dive right into this opportunity. We're going to have once a week repeat here where we kind of give you, for entertainment purposes only, a look into what might happen next week into the cannabis stock market. So with that, Rohit, take it away.
Well, thank you, Josh. So what this company does basically we are AI building software, and what we basically do is we build tools to analyze stocks, to analyze equities, and also do automated trading, because that's the core of it, is taking out the emotion out of investment and investing purely based on artificial intelligence. And what we do is we sell it to hedge funds, and one of them is using my own hedge fund uses that, which is the Saroj Investments Fund. But it's completely artificial intelligence based. It's completely proprietary and home-built software.
So basically breaking that down, though, you're taking just an AI-based tool that you wrote some code for, and it's making some predictive, analytics to say what the market might be doing.
That's correct.
And then you're able to then infer from that which direction it might go.
That's correct.
This sounds kind of like a crystal ball.
Well, you are right on that. It kind of predicts what basically it's going to do. The AI tool, in a simplest example of what an AI tool is, like if there's a machine which brews coffee for you every morning, and it realizes that you only drink one cup of coffee, and it's been making 4 cups of coffee, it'll stop creating the 3 extra cups of coffee. So that's the intelligence it builds in a very simplistic way. This is a similar thing, which basically it identifies what kind of direction stock might move, and it will invest automatically into that. At the same time, core of investments is cash management, is trade management, and that's where the smart frequency trading comes. So what we basically do is we build these investment models, and what these investment models do is they basically suggest what stock to buy, when to buy, and it does based on stock data, which is completely AI-based, uses predictive analytics and behavior, trying to understand what kind of behavior it's going into. It uses market emotion, trying to understand what's the volatility and how much cash is coming in, how much cash is going out, are people cashing it out, or stuff like that. And still uses the traditional technical analysis as part of it, trying to understand that technical analysis is a tool which basically the whole industry uses. So deviating away from that is probably not a smart intelligence. So the artificial intelligence still uses some of the technical analysis and tools which the whole industry might be using. And
right, offline we looked at fundamentals, right? And fundamentals are not really something that you want to play with the numbers, but technical analysis is. And really, I mean, all joking aside, the whole idea behind this is take the emotions out of it, right? People they buy low and they buy high and they sell low, right? They kind of do the opposite. So this is really kind of to help alleviate some of the problems that humans have by taking some of that emotion out of it.
That's correct. And like you're saying, the core of it is the emotion, is the smart frequency trading, where you got to realize that the cash management, the trade management, is when to get in, when to get out, is the core of the idea of that. So, and thanks for giving me this opportunity to talk about cannabis and spend some time about this index, which we created, which the Cannabis Index. And if with your permission, I would love to talk about that. And unless you have any more questions to ask me about it.
No. Anything else you got to show us before we?
Well, what I want to conclude is that basically based on what the index shows, I think the cannabis market, the index itself is in a downtrend. And the other part is that it also is in a downtrend from a selling point of view. I think the next 1 month next 3 weeks is very critical to understand that if the inflow of the stock of the market is going to come back and raise the market a little bit more. So that's probably would be my conclusion based on what the data looks like and what the technical analysis
Let's dive right in. There's a couple of indexes out there already. The ETFMG Alternative Harvest Index, ticker symbol MJ, had a huge tear the first quarter of 2019, up almost 50%. I think it got to 46% or more, and then has crashed. And so there's been a lot of interest in individual equities and overall portfolios or ETFs. And so I have asked you to put together some stock. Looks like you grabbed maybe 19 companies to throw together in an index, and I'd love to see kind of what you've done.
Sure. So these 19 companies were pulled based on different aspects, not just entertainment-based marijuana stocks, but entertainment-based or medical purposes or testing tools, technologies which will help this industry to grow. So there were different companies, and these 19 ones are that basically I picked. And you can see the performance this year based on, like you were saying, that some of them perform at Excel, some of them were really terrible, and created an index based on equally weighted investments. Like if I put $1 in each of these stocks, $100 in each of the stocks, how would these index perform overall? So based on, like I said, like if you put $100 in each of these stocks and investments, and how would these perform over a period of time? So taking this like last 3 years as a starting point, that last 3 years, how this index has performed. And like you can see,
is this a regressive analysis that we're looking at over the last 2.5 years?
Yeah, like over the last 2-ish years, 2 to 3 years. And what basically you can see that the trend has consistently been upwards. And there had been a die where in 2018, the last quarter of last year, where like the whole industry, whole market was going downwards in that direction. This was the point of entry point. If somebody wanted to get in, the 111 was the breaking point where the stock was getting back in. That was the getting point into that. Was a re-entry point of that. And since then, the market has been doing good. But like I said, when you're talking about trades, you basically still have to manage your investment. You still have to manage your when to get in, when to get out aspect of that. And remember, this is an equally weighted investment. This is not where you are trying to weigh the company based on how much net revenue they get, net profit they get. This is not based on that, which most of the indexes do. So if you would have got in there, and probably the getting point of that was somewhere at the mid of July, that would have been the getting out of that. So you can see that the trend is completely in the upward direction. However, since mid of July, there has been like a massive sell. Like you can see, there has been massive sell where the index broke down and could fall further down than that. And it even broke the mini trend it was trying to create. It even broke that trend. So what my analysis tells that it will keep falling, and it'll probably, this index will probably fall till a support line of $4.75, which would be the net index value at this point of the stock. If not, then we might have to wait for the next trend to start to get into this point.
What's the process of getting in and getting out? Do you have like a trailing stop loss when it's going down like it is right now, or are you playing that on the way down with options?
So most of them are trailing stop loss. And there are multiple ways of getting in and getting out of this in this particular market, and in this particular algorithm. One way of getting it is anytime it breaks a trend line, that's when you got to get out. And anytime it gets into a trend line, that's when you get in. So there's one approach of that. The second approach is you can have a trailing stop loss, which I prefer a trailing stop loss of like about 10% in this volatile market of the index itself. So the trailing stop loss of 10 margin. But if you take the first approach, which is the very simplistic approach, that anytime it breaks the trend line, you sell, and anytime it gets into the trend line, that's when you get in. Even with that approach, in 2 years, you'll still be seeing like about 200% growth. So this was completely price based. But if we take this next approach, which is more volatility based, and volatility in the sense like how much money. So this is a homegrown investment model, which completely AI using AI tools. And what this basically analyzes, it analyzes how much.
One sec, I'm sorry to interrupt you, but is this a combination of an RSI, or relative strength index, and some other things that you've seen in the past, or what did you do to throw this together to make this your own indicator?
So this uses the how much of cash in and cash out that's happening. So this does not uses any RSI and MACD or stochastics or any moving averages. This is not.
But it is a money flow indicator.
That's right, it's a money flow indicator. And what it really does is it identifies how much cash in people are putting in and how much cash out they're doing. So what it really means is that people are putting cash in all the time. But there is a trend that happens, and the blue line which you're seeing is the actual cash in and cash flow of this index, and it takes a 15-day moving average of that. And the red line is the average daily trade value of per stock. So on an average, 95 million, 93 or 100 to 90, 100 million of investment is done every day in this 19 stocks. That's what it really means. And so like you can see that, the entry point in the previous slide, we saw that 111 was the entry point, and that's where a bunch of cash flew into these 19 stocks. And it will keep going up and down. That's the nature of this industry, that it's completely very volatile. It will keep going up. But the general idea about this uses completely AI tools of understanding what the behavior of the stock is, what the predictiveness of where basically it's going. So what, from that point of view, what really saying is that overall in the last 8 months, the trend of how much money is coming in and coming out is going downwards. So it means that people are pulling money out of this. People are pulling.
Can you infer from the data if there's a movement in the market? To make an analogy, I worked for a company that would aggregate trades. If you wanted $5 of Berkshire Hathaway that was trading at $180,000 per share, you could do that. And so we were a broker dealer. We were allowed to aggregate trades and then go out on the market one day a week and buy hundreds of thousands of dollars, if not millions, 20 million at times, and buy and move the market. What I'm seeing is on the first of the month, in February of 2019, the market kind of starts to plummet, and then you see March, and again in April. You look at May, look at that plummet. July 1st. Is there a chance, and I know I'm asking you to infer, and it's probably the worst question to ask someone like yourself, do you think that it's possible someone's moving the market on these specific days? There's a repeat pattern here.
It could be possible that people are just trying to move the market, but it's also possible that we had an extremely good run in the last couple of years in this stock from the time this has opened up in a couple of states, and there was a lot of money pumped in. So when I look at the first year of the market, it was all pumped in. But over a period of time, I feel that one of the two things is either there is a pull out of the money from that, or it is an indicator that a slow buying is happening over a period of time. A slow buying is happening. The pumping happens. People put in money in there, and they dump it. They're still taking out the profit, but they're slowly buying at a lower price. That's what probably might be happening. But like I said, if you look at this H2, but if you look at the H2, that's where the pattern is changing. You can see that there is a completely downtrend. But in H2, that's where the pattern is changing. It doesn't say anything that, this is the point to get in, because the whole matrix about this indicator is that as soon as the money pumped in goes over the average daily trade value per equity, that's where that's where the opportunity lies in getting in. That's where the opportunity lies, that there are a bunch of people trying to pump in money into this.
I'm no chartist, but I can tell that August 2nd, there's definitely a change in the trend.
Right, and you're correct. That's a change in the trend, and until it is still a point where it needs to be it needs to be on hold. And like I said, that unless the behavior doesn't change, and the pumping money or the cash in cash out value of the 15-day moving average does not process the daily trade per value equity per equity, the market is still at risk. I would say still at hold. People who want to get into this trade, they should still be holding on those things, on those trades. That's what I would say at this point where it is.
So what's going to happen next week?
So this is what from what I like I said, like from what my thought process around this is, if I want to get into this market, I would probably wait till for maybe like 1 or 2 weeks, and in 1 or 2 weeks, what it looks like it's trying to create a new trend, and the new trend is kind of trying to move upwards at this point. That's what I think, but regardless, I think the point to get in is after it crosses this red line, which probably it looks like it might bounce back, and that probably in maybe end of August, end of September is probably the point where probably it might turn around. That's what that's what from predictive point of view, that's what probably it looks like. But if it doesn't, then if it falls below this point, which is you're saying it falls below this point, then this was more like a fakely created matrix for pumping out some more money. But I think in the next 2 weeks, 2 to 3 weeks, I think it is mostly on a hold pattern and waiting to bounce back from.
Now you should also see some asset reallocation. A lot of portfolios this time of year, when people you say sell in May and go away. Now that they're coming back, they're going to look at some of the high returns that they got, probably sell those and look for some more value securities. So there's definitely going to be some shuffling around for the next couple of weeks. Absolutely. And that's just normal in the industry. It doesn't really have anything to do with this.
That's correct. So I thought that maybe I'll pick 2 of these talks and give like an overview of like what basically might be happening with this. One of them is the Aurora Cannabis, which basically you hear is a 5-year chart of that. And what really you can see is that it's creating a pennant, and what really is a very bullish signal, trying to tell that there can be a break off happening on the opposite in the upward direction, where there is a sudden rise of the stock, and then it keeps fluctuating in a channel. And but on the other side, what you can see is the RSI, the strength or the relative strength index of this particular stock is descending over a period of time. So what it really means is in the last whatever number of years, 4 years, the strength of the stock has been going down. Also, the MACD, the moving average convergence divergence, is bearish. It is the momentum of the stock is going down over a period of time.
But it's flatlined.
Say it again.
Does it kind of look like it's flatlined, like it might be coming back up, like it's almost oversold?
It is oversold at this point, and it could sell even further. So what it really means is that this is the point where the massive sell-off started. If you can see my mouse, can you see my mouse?
Yeah.
Oh, okay. So this is the point where basically massive sell-off started, and it has been in the downward. It is at a point where it can break off downwards, or it can rebound back. Now, if it rebounds back and breaks this $10 point, that's where probably the next jump is going to happen. So what I would say is that in this particular case, if I want to trade this, I will probably wait for either to fall it further down and wait to bounce back on this 200-day moving average. So that's probably the point where it probably will convert back. Or if it bounced back, that might be a point to get back in. But this 50-day moving average is where the point where it might be decisive, that if it will rally further, or it might turn back and go further down. So you can play the small rally between these two, which is like the turning point. If it turns back, rebounding back on selling it on the 50-day moving average, and wait to see if it's bearish. Where it looks like it is going to be bearish from how the momentum is and how the strength of the stock is. It looks like it's going to be bearish. But if you want to play a short play, that might be the short play I would play. That is to, if it bounce back, then sell it at a 50-day moving average with a stop loss associated with that.
So that range is getting shorter. Does that mean it's going to have a breakout?
That is correct. So it is at a breakout, and it could either break out. It could either break out in the next 1 week downwards, or it can fall further, or it can break out somewhere like in the considering the patterns, it would break out somewhere in the first quarter of 2020. That could be the next breakout. But I mean, that's the there is no timeline on this, right? So, but these timelines are designed based on on the history, on the past, where it's happened. But what it really looks like at this point is it could either break out somewhere in the first quarter of 2020. That's probably has a high probability of that.
Interesting. What's the other one? What else you got?
So the other one is Akara Therapeutics, and what this is a very strong stock. This is a very strong company. Performed very well in the last how many years, and even in this downturn, when most of the stocks are selling out, it hasn't really broken off the bearish signal. So from the MACD point of view, it consistently has an update, but even from the MACD point of view, it is converging and it's trending upwards. It is converging, and it is a very bullish signal from the point that it might stay steady at this point, but it is at a point where it could break $25. What I would say is that if it breaks 25, that's when you have to get back in. Yes, we have to get in. So people who are already in this trade, who already own this, they probably can hold it for maybe till this moving average turns basically negative. Where and this is one of my favorite ones, which is the 13, 8, and 5 moving averages, exponential. Till it converges, that's where the point they can hold it. But if they are not holding and they want to get back into this trade, I will probably wait for either to break till 25 or wait for the next cycle to start.
Mm-hmm.
So if I have to guess, if I have to predict based on what the chart says, the relative strength is pretty good. The strength of the stock is pretty good. It has been consistently strong throughout the cycle of the last whatever years. It has its ups and downs, and like here, if somebody was in a trade, this would have been the exit point where the 13-day moving average is basically got higher than that, and that would have been the point to get out of the trade. But that's the part which every trader, every investor has to do their own research, that when they're going to get out of the trade, what is the point to do that? Either it's a stop loss or it's a signal, one of those two. And if they do on a stop loss, if they rallied on this, they're probably somewhere with a 10% stop loss right here. And if they basically did based on a signal, this signal would have been the point to get out of the trade. So even in this, for any example, right, this one where there is an uptrend, like if somebody got into trade here, where there's a confirmation of the signal that it's going to go upwards, the selling point would be somewhere here, which is from $7 to $14 of trade. But that's the part of the trading aspect that people have to understand. Whoever is trading, they have to understand when to get out of the trade. But at this point where this stock is, it is not at a point to get in. And people who have, it's a point to hold and see what happens. That's where it lies.
Mm-hmm.
But out of all of them, I think this probably looks like a very good stock to hold long term. People are having them.
All very cool stuff. I can't wait till next week to see what happens. Interesting. I guess we're going to have to come back to the Talking Hedge next week and find out.
Sure. That sounds awesome.
So with that, we're going to roll this one up. I'm Josh Kincaid. This is Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.